And it's the 9th of January, 2023. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off your morning now with the markets. We see the markets, the oil markets started on a good note today as traders reopened in China as the world top crude importer, boosting the outlook for fuel demand growth and offsetting global recession concerns. Brent crude futures rose 90 cents to $79.47 a barrel, while U.S. WTI intermediate crude was up 90 cents, about 1.2% at $74.67 a barrel. Hopes for less aggressive U.S. interest rate rises are buoying financial markets and depressing the dollar. A weaker greenback makes dollar-denominated commodities more affordable for investors holding other currencies. Despite the gains in oil, and today concerns remain that the massive flow of Chinese travelers may cause another surge in COVID infections. Those concerns are reflected in the market structure for the benchmark oil futures. Both front-month Brent and WTI contracts signed contango when current prices are below prices for later delivery contracts, which typically indicates bearish sentiment for the market. And the limits placed on cash withdrawal for individuals and companies come to effect today under the policy introduced on December 6, 2022 by the Central Bank of Nigeria. Individuals can only withdraw a maximum of 500,000 naira, while corporate organizations can withdraw as much as 5 million naira cash per week. Also, third-party checks above 100,000 naira are no longer eligible for payment over the counter. It would henceforth be paid into bank accounts. So it's a D-Day today. We're looking out for that. And to our next report now. Less than 27 days to January 31st deadline when the old naira notes will cease to be legal tender in the country. Many Nigerians say they're yet to see, touch, or transact with the newly redesigned notes. Our business correspondent, Willie Bong, provides an update on the current supply of the new naira. Take a listen.
Since the release of the redesigned naira note, very little supply in circulation. Several comments on social media platforms have trailed the seemingly palpable scarcity. This is also reflected by the man on the streets.
I just withdraw money from the ATM now and it's not there. And we will have till the ending of this month before they close the collection of the old money. And still now, up to now, the only money we can get from the ATM is still the old currency we have.
Since this has been in circulation, nobody has come with this to buy something from me.
Others are, however, not concerned.
To me, that's not the problem of the nation. That's not actually what will help us to salvage the insecurity, the poverty, and the rest of the thing that the nation economy is gradually dying and fading away.
At ATMs in cities such as Kano, Calabar, Owerri, and Lagos, the old notes are still conspicuously being dispensed. Could this seeming shortage in supply of the new notes be linked to its availability? The Deputy Governor of the Central Bank had to respond to this when she appeared before the House of Representatives.
Can the CBN tell Nigerians how much was printed out of this new currency? How much was printed?
I'm sorry, I'm not able to share that figure now only because I want to give an accurate number.
Even though the CBN governor disclosed that 500 million pieces of new naira had been ordered, the Senate is asking that the deadline be postponed to June. A view supported by some analysts.
I feel that with the current situation, we may actually see a shift, because if we are unable at this point in time, even those of us in the urban area, it should have been well circulated in the urban area before we even start seeing much in the rural area. But with the situation, even in areas where we feel a lot of business activities are going on, and the old notes is not readily available. So there will be I feel that there will be that when CBN assess towards the end of the expiration of the hold notes, they may not have any choice than to move it.
There are also allegations of fake notes, which has led to distrust of the new naira.
Since it's Nigerian money, I will, but I am afraid of it because lots of people are complaining about it, and in circulation that the money is not even up to a month now. Some are even saying that the fake is mush.
In response to this, the CBN released some security features. Will the deadline be postponed or not? Nigerians continue to wait for that while getting familiar with the security features of the redesigned notes. Will Ibong, Channels Television News.
And now to our first conversation. Transport is essential to the efficient working of the economy, bringing together the inputs used in the production of goods and services and getting outputs from the production process to customers. The Lagos State government recently completed the first phase of the Blue Line Rail, the Marina Mile 2 infrastructure. Let's get details of this project now. Joining us is Engineer Abimbola Akinyajo, MD, Lagos Metropolitan Area Transport Authority, Lamata. Join us right here in the studio. Good morning. Great to have you.
Good morning, Ladi. Thank you very much for having me.
So I know you did, go on the test run.
Yes, I did.
And I want you to paint a picture for me now, because I wasn't there. Okay. How was the experience?
I mean, for us, it was just phenomenal. It's something that the state has been working on and we've been looking forward to. The ability to move from Mile 2 to Marina in less than 10 minutes. Even you would say that that is an amazing feat for us. And it is the future of where transportation in Lagos is going.
All right. So looking at it, obviously quite an impressive feat now. But what challenges would you say, were there before you actually got to this stage?
So we've been doing the implementation of this for a while. There's been a lot of challenges. First of all, we're building in the middle of an existing carriageway that was actually being worked upon. So you had two contractors working circa in the same space. You have the fact that you are elevating everything from Igomu. It goes elevated all the way. And working in areas where, if you know Alaba at all, it's hugely densely populated. There's a lot of activities going on around there. Trying to get your materials to your location for implementation in itself was a challenge because of the traffic that was there, and you always need to move concrete in a certain time. So that was that with regard to moving within a congested area to implement. Then there's the fact that we have to bridge over existing bridges, and beyond that we had to do a bridge in the lagoon. So from that perspective, there's been a lot of challenges. We've had shipwreck in it. We've had to move gas main pipes along outside of our corridor. But like I said, Lagos, we never give up. It's been very, very challenging. The terrain of Lagos to try and build an infrastructure like this in the middle of a city that is actively working and very busy is very challenging. But we're here now.
And I know the first phase is done, but what's the length of the total project?
So the total project is 27 kilometers from Okukumaiko to Marina. So what we've done now is circa half of it. From Mile 2 to Marina is about 13.2, 13.3 kilometers.
And when can we expect the second phase? Oh, I know Oliver Twist right now, even though you're done with the first phase. When can we expect the second one?
So the vision is to start the second one before the end of this first quarter of 2023. So we want to start operations, and then we will continue going backwards towards Okukumaiko. And that is what Mr. Governor has said that we will do this year, and I'm sure that we will do it.
And obviously, this would be a capital-intensive, project. Talk to me about funding. Okay.
So historically, before Governor Sanwo-Olu came, Lagos State had been sort of funding it completely out of its Nigeria, and as they find money, they pay. But what Governor Sanwo-Olu did was to work with 3 banks and the CBN, and we got funding as part of the DCRR cash funding for major projects, and Lagos State got that, and that's what we used to complete, to actually pay the contractor to complete the work. And that's what has happened, and I guess that's the big push that we've seen in the past 18 months, 18 to 24 months, that has brought us where we are.
And also there's word about, the president, coming into town to commission. But when can we expect?
So that will happen on the 24th or the 23rd. So it's 23rd, 24th, I believe, is when Mr. President is coming.
So is it the total project?
He will be, there's a number of projects he will be commissioning. The one that concerns us, obviously, in La Mata is this one. And he will be doing that in that space of time when he comes.
All right, let's talk about, safety. This is obviously a new, infrastructure. What can we expect, when it comes to how safe is it?
I think this is probably one of the safest ways in which we can travel in Lagos. We see the levels of accidents we have on our roads, and bearing in mind the number of people we will be carrying. So, for instance, we've said it so many times that this track is electrified. It's an electrified track, and the electrification is along the alignment. So it's not the overhead type, it's the one that goes along the rails itself. So what we don't want the citizenry to do is to cross the tracks at any point whatsoever. And to ensure that you don't have to, we have implemented a number of pedestrian bridges at every station that will ensure you can not only cross, and we've also got pedestrian stations in between the stations to ensure you can cross not only into our stations but also across the Lagos-Badagry Expressway. So that's the one thing. And then along the safety of our passengers, we have a number of security gadgets that we've put on. We have CCTV within the trains itself, on the platforms, along the alignment. We are working with the police and the neighborhood watch and all sorts of security agencies to ensure the safety of the passengers as they travel. So there are things that we are putting in place. There's a lot of security infrastructure that we're putting in place to ensure the safety of our people, and I think
and safety of people outside the train, because it's an electrified track, so that's risk of electrocution. If you cross it,
that's it.
Right.
So for us, what we've said is we've got every other means for you to cross the road without having to cross the rail. We have completely fenced along the whole alignment of that railway alignment. There's fencing there. We will have a number of signage along the alignment. We are continuing now to do advocacy, to explain to the people, don't cross because it's dangerous. We're doing a lot of skits with Nollywood actors and actresses that will help us send the message so that the people can get it. All of the messages that we're putting it out in various languages, in Yoruba, Hausa, Igbo, English, and even Igbo. We've done that. We've done some French translations as well for neighbors who are not resident here, so that everybody can understand. And we intend to keep doing that time and time and time again over time, so that until we get used to it, until the people are comfortable with this system, we will always continue to make those announcements and to make those advocacies every.
Right. And talking about, electrical, obviously we have our challenges, when it comes to power supply. Yes. What's the plan there? Okay,
so for us, the way to power an electric powered train would be, technically, you use the grid. But we know how epileptic our grid has been. So what we've done, we have two sources of power coming from the grid. We're working with EcoDisco. But beyond that, we have an IPP that's been built solely for this. That IPP, between that IPP and the grid, we have a UPS system that ensures that as I move from one type of source to another, you can't feel it. So it is instantaneous. In that way, wherever you are, when you are moving in the train, you will not notice if there's a change in power. So we have catered to that, and we're very confident about what we have.
And obviously we want better power in Lagos,
yes.
Obviously, so that there won't be any issues. Let's talk about ticketing. Now I heard about the Cowrie card. How does that work?
So we have that already in Lagos, actually. So all of our regulated transportation systems use the Cowrie card to get onto it. So the BRT buses, the regular regulated buses, all those blue buses that you see, you utilize the Cowrie card. Even the first and last mile buses, the small ones, you use the Cowrie card. On the regulated ferries, the lag ferries, you use the carry card as well. So for us, we have an automatic fare collection system. You have the gates, and you will be able to get a carry card, load it, and come to the gate, tap, the gates will open, and you will go in. So that is a way in which Lagos will now continue to pay for transportation.
Let's talk about affordability now, to make sure this is not for the 1%.
Yes.
What's the plan for pricing?
So, at the end of the day, first of all, we must know that when you do something like this, you must engage the people. So what we're doing now is that we are actually carrying out a study. We have done the ridership numbers. We are now understanding how people travel, but we're understanding their willingness to pay. What are you willing to pay? Understand the fact that as against sitting in traffic for 2.5 hours, you will be doing that journey for no more than 10 minutes one way, 10 minutes the other. So I'm saving you what? 2 hours, 10 minutes. What do we put on that? But even then, Lagos will never price the ticket such that it will not be affordable to everybody. So the vision is to get as many people onto these trains as possible. So for now, we're still in the process of these studies, but I know for certain that we will not be too far from whatever you are paying now, from Mile 2 to Marina. Whatever you are paying now from Mile 2 to Marina, the difference will not be much.
So that means I believe I'll be able to afford.
Oh, you will be able to afford it, and most of us will be able to afford it.
Most of us.
Most of Lagos will be able to.
Fantastic. How much of a game changer, is this for the Lagos economy? And let's talk about sustainability now, going forward. What's the plan for sustainability?
So for sustainability, first of all, we're doing the right thing. We're powering it electrically. We also have everything in place to ensure that we have a system that will run. And that's part of the reasons why we're carrying out these 3 months of testing and commissioning. We're debugging and we're ensuring that all of our processes work. We're ensuring that the people know how to get onto it and how not to get onto it. There will be a maintenance contract in place to ensure that the infrastructure is maintained. We will start off running as state with a management contract, but the vision is that we will end up with a concession agreement where private sector will come in, and that is where sustainability comes. When we begin to get the people of Lagos to come and partner with the state to ensure that this infrastructure is 100% utilized to the efficiency is great to the benefit of the people. So we're going to be, right now we're in conversations. We have done a lot of bidding process, and we have 2 shortlisted members of private sector who are talking to us about taking on the running of the Blue Line and bringing investment, so bringing more rolling stock and ensuring that we can actually deliver transportation promise to the people. So we're looking very easily at being able to carry only on the Blue Line circa 500,000 passengers a day.
And what's the revenue expectation like?
So, I mean, in that sense, you're looking at it from the perspective of, first of all, it must pay for its own operations. And that is the first thing you're looking at. Government has done a lot of investment in it. Beyond that, it is also to drive the economy of the city. So ensure that people can get to their offices quicker, and that means you think about it. If we're saving you 2 hours, 2 and 2 hours from, so say I save 4 hours per person and I have 500,000 people and I carry in a day, that's over, 2 million hours in a day that I'm saving. That means that those 2 million hours become productive hours for the city of Lagos. So when you look at it in that sense, there will be a lot of, beyond being able to run that infrastructure and that service, there is also the fact that the vibrancy of our economy begins to grow because of the productivity that we suddenly have injected into the economy.
Yeah, because obviously a lot of man hours is, lost in traffic, gridlocks in Lagos. It'll be interesting to see how, this all plays out. And can we expect more, infrastructure like this, investments going forward? Oh,
yes, definitely. So we have the Red Line, which is in progress at the moment. And by the end of February, we would start that one as well. And that's going from Agbado to, the first phase of it will go from Agbado to Oyingbo. but the full length of it will go from Agbado to Marina, and there will be a spur that goes to the international and the local airports in Lagos. So those are the first two that the state has started to tackle. But we have 6 metro lines within the STMP, the Strategic Transport Master Plan. And those ones, you have one going from Mowe to Lasu, another one coming from Ikorodu to Ikeja, one going from Ota to National Theatre, and the Green Line that's going from Marina all the way to Lekki Free Trade Zone. So there's a lot that's coming. We are continuing to work with the Strategic Transport Master Plan, and I know that the current governor is gung-ho about transportation from his name's agenda. We see that transportation is big, and I know we have already been told that we must begin to look at the next 2.
All right, we'll be looking forward to all of that. Thank you so much, and obviously I can't wait to actually ride in that role. Thank you so much, Engineer Abimbola Akinjo, MD, Lamata. It was great having your perspective today.
Thank you very much for having me.
All right, so we'll take the conversation further now. After the break, we look at inflation for Nigeria. What can we expect in 2023? That's our next conversation. Do stay with us. This is Business Morning. And now to our next conversation. In 2022, was all about, inflation. And, well, 2023 started and we're still, talking about inflation. In October 2022, the IMF called its outlook for global economic growth in 2023, considering the ripple effect of the Russia-Ukraine war, as well as inflation pressures and the high interest rates engineered by central banks across the world. But what can we expect for inflation in Nigeria in 2023? Let's talk to Gbemisola Alonge now, Senior Development Analyst at STAIRS. Join us via Zoom. Great to have you on the show, and Happy New Year, Gbemi.
Happy New Year, Ladi. Thanks for having me.
Yeah, so nice hairdo. I see you've changed that in 2023.
Thank you.
Yeah, the inflation story, as some have said, well, it's the central bankers' fault, for the inflation we're feeling now because of all the stimulus packages when COVID, was hemorrhaging economies. And, fast forward till now, they did predict that with all that printing, we would see, high inflation. We're seeing it right now. But now some are blaming it on the Russia-Ukraine war. So who's to blame, really, or is it a combination of both?
Yeah, it's a combination of everything, really. So first thing, like you said, there was, a significant inflow of funds into several economies across the world. For example, the US injected about $5 trillion into their economy. At the time, that was like a fifth of their GDP. And 3.5 trillion of that went directly to individuals. So like to people in terms of like, unemployment benefits and things like that. So what that meant was there was literally money in the hands of people. And that also coincided with the time when the entire global economy was going through like a supply chain crunch. So there was low supply of goods and services as a result of COVID and the lockdowns and all that. But there was also a lot of money. So that caused, inflation to rise. But the expectation was that by the time, COVID is, sorted by 2022 at least, economies will get back on their feet and like supply would increase again and, everything would just get back to normal. But what we then saw was, that didn't happen. People were still struggling with like supply chain issues, particularly in like food and energy segments. So, and this was as a result of the Russia-Ukraine war and even China, being in a lockdown. So all these together influenced, how badly prices went up and just refused to go down. Concerning the Russia-Ukraine war, we know that Russia and Ukraine are like significant producers and suppliers of food. So things like wheat and even fertilizers from Russia are very important for like global food supply. But then because of the war, there was, at some point the Black Sea was blocked and Ukraine couldn't like send out food until the WTO and some other significant parties stepped in to negotiate with Russia. So a lot of that just basically informed like reduced supply of food. we've seen like energy issues between Russia, and Russia is obviously a significant supplier of energy to the rest of the world, especially Europe. And because, of the war, they were not providing as much energy and still might not this year to Europe. And that just, influenced a lot of things. So it's a combination of, lingering issues from COVID, like, people having money and not knowing what to do with it, the world still going through like significant supply chain situations, and then the impact of the war.
And obviously, inflation is still elevated globally, but, we did see some tapering with economies like Germany, Eurozone, and and even in the US. But, back here in Nigeria, any bright spots for us, when it comes to inflation? I don't know if you heard me, Mimi.
So I guess the good thing is once the global economy, yeah, I can hear you. Can you hear me?
Yes, I can. Yeah, fantastic. Yeah, you can go ahead. I can hear you.
Okay. So I was saying that the good thing is that once the rest of like the global economies like the US and Europe start to see like reductions in their inflation, that means that, there is the possibility of them reducing their very aggressive inflation controls. And that's good for countries like Nigeria. So if the US starts to reduce, or stops increasing their interest rates, that means that there's cost of capital across the world is lowered, and that means there will be a possibility of more inflow of funds and capital into countries like Nigeria, basically the emerging economies. So, I mean, it's a good thing that that's happening, and that's like the bright spot. However, in Nigeria, we're also seeing some of the issues that drive inflation in Nigeria, things like food prices, that's obviously by like supply chain issues within Nigeria, and also like issues like flooding, farmer headers crisis, and things like that. So all of that are still things that we haven't solved and are very, very influential for inflation. Also, the monetary policy and how that influences how much money is injected into the economy is also very instrumental to the kind of inflation that we have. So yes, indeed, if inflation across the world actually reduces, then it's a good thing for us. However, we still have very significant underlying issues that need to be solved within the country.
And obviously, global equities markets did react negatively to, inflation we saw, in those countries. But here in Nigeria, the NGX was the best performer, even though inflation was sky high in Nigeria. How come?
So first thing is, it was that way because, I mean, on the one hand, it was strong at the first half of the year. So we saw the equities market do significantly well. But then, I mean, that reduced towards the end of the year when interest rates increased and yields on fixed income assets increased as well. And, investors tried to take advantage of it. But then typically, foreign investors are typically the major investors in the equities market. That wasn't the case in 2022. In 2022, most of the investors are domestic investors, and that just meant that, I mean, if people were unable to the equities, if there wasn't a lot of money coming into the country, I mean, domestic investors took advantage of it, and they took advantage of the very well performing companies and just the very well performing stocks in the Nigerian economy. Even the companies themselves, they also, I mean, across the different segments, the banks, FMCGs, they performed really well. And that could be because, at least in the FMCG segment, they took advantage of the inflation, the high prices, and this led to high performances for them as well. So domestic investors basically took advantage of this. Towards the end of the year, though, we saw this decline because, I mean, as a result of the high interest rates, investors then took advantage of fixed income assets and just basically diversify their portfolio. But yeah, I mean, domestic investors are
Right.
the reason for the well performing equities market.
And obviously be watching out for how that performance plays out in 2023. But now for the $1 million question, what are you expecting for inflation rate in Nigeria in 2023?
Okay, I mean, so first thing to note is that 2022 was a record high. I mean, across the world, really, the US saw inflations that they had not seen in like 40 years. Same with UK, Nigeria as well. We saw like a 19-year high inflation rate. And so obviously that caused everybody to basically just, try to solve the inflation problem across the world. Central banks were just increasing rates to ensure to drive inflation down. But what that meant was there is now a risk of a recession across the world. At least the IMF anticipates that a third of the world will experience recessions this year. And when there is a recession, it affects Nigeria. It means there isn't that much economic activity happening. And the reason for a recession beyond just the hawkish stance by the central banks across the world, there's the risk of China, having a COVID crisis again. We're already seeing that happen with like high COVID numbers and the possibility of deaths in their country. So if that actually happens, there's the risk that China will shut down again. If China shuts down, the entire world obviously feels the impact because economic activity would reduce. One impact of that is that could result in like low oil prices. Nigeria, as we know, at least the government, is very, very reliant on oil revenue. If there's low oil prices, there's less dollars, and that means more inflation for Nigeria. If there's no recession, there are other drivers of inflation in Nigeria. Some of them are like food prices. If the war continues and there's still a struggle to get food out of Ukraine and Russia, then obviously we'll still see like food prices elevated. If Russia, as well, reduces their production as they've already said they would, and stops flowing oil to European countries, that would also affect oil prices. When oil prices are high, we also feel the impact because things like diesel and other energy goods obviously feel the impact of high prices. So all in all, it's not looking very good for Nigeria. If inflation reduces and like the rest of the world basically reduces their interest rate, there are other things that could happen. If there's a recession, Nigeria is impacted because fewer dollars mean more higher prices for Nigeria. If there's no recession and things go back to normal, everything is going as planned, all prices would increase, and also that's not very good for Nigeria, considering that we're not taking advantage of the high oil prices because of our production. Also, there's the possibility of the fuel subsidy being removed this year, or at least partially. What that means is, petrol prices at the pumps would increase, and that's also something that could lead to significant inflation. All in all, inflation does not seem to at least go back to pre-COVID numbers anytime soon. That's not great. But if inflation across the world reduces, then we might see like a decline, although not significant, but a decline nonetheless.
Right, so major forecast for 2023 for economic forecast, mostly, gloomy. Let's hope that it's not as bad as forecasted. Thank you so much, Gbemisola Alonge, Senior Development Analyst at STAIRS. Thank you so much.
Thanks for having me, Ladi.
All right, so we're talking inflation there, and obviously the markets have reactions when it comes to inflation. And now we have Anete Edet now to come tell us what we can, expect, for the markets come 2023. We're here now, and obviously investors are looking to, make gains in this market. So, Anete, it's,
Good morning, buddy, and Happy New Year.
Happy New Year, Anete.
Okay.
So it's a new week, and obviously the markets, I'm sure investors are ready to make profits in most of these markets. Yes. How's it looking?
And at the same time, it's what I would call it's a season of outlooks. Everyone will be giving you their outlook. The year's just began. Today is the 9th day of the new year, 2023. And of course, investors, they always keep their eyes out for the outlook of the market across the board, both for the bonds market, the treasury bills market, the equities market, as well as the money market. So,
do you think the investors are going to listen to the outlooks?
Well, most likely they might, but they might take it with a pinch of salt, or maybe just take it wholly. So, but it all depends, because sometimes some of these things they seem to have a change of themselves. Right. So now, with that being said, we take a look at what's happened at the fixed at the FX market last week, it was not too good for the market. It was down by 32.09% in contrast to what you had in the previous week. That's the week before the year ended. So the market fell by about 192.02 million naira dollars in contrast to what you had, which was $598.41 million. But at the end of January the 6th last week, this is what it turned out, and that's mostly because there was a decline at the FX spot market, which fell by 42.75% at $291.44 million. But when you take a look at the forward markets, the forward segments of that market, it was up by more than 1,300%. Now, let's move over to the Nigeria autonomous foreign exchange rate. The naira took another bashing. It was down by 0.24% in contrast to what you had the previous week. So now it is currently, as at January the 6th, is at 461 naira, 1 kobo, in contrast to 459 naira, which is what it was before now. Now, we will be talking to Dimeji Obasa, who is a fixed income analyst at Access Bank. But before that, we take a look at the bond market as well as the treasury bills market. They were on the bullish side. For the bonds market, it opened the year on a bullish note. That's because investors continue to take positions in attractive positions across the curve while anticipating the release of the first quarter of this year's bond issuance calendar, which is supposed to shape the direction of their investment. And at the same time, we will be taking a look at how the inflation numbers already, financial derivatives company is projecting that Nigeria would have its first decline in 9 months for the inflation rate, currently at 21.47%, but then they're looking at the inflation rate that it will be at 21.28%, recording the first decline. For the treasury bills market, it was also bullish, like I mentioned also. So now they will be expecting the outcome of the treasury bills auction this month. So now let's talk to Dimeji Obasa to give us more insight into the fixed income markets. Thank you for joining us, Dimeji.
Good morning. Thank you for having me.
Okay, I think before you joined us, I was just talking about the fixed income market, both the bonds market and the treasury bills market. Now, can you give us more highlights on what to expect this week, particularly when you look at the FGM bond auction last week and then the treasury bills auction, which will be conducted this week?
Yes, you're correct. We've seen bullish trends persist in the market to open the year. For this week, we do expect the DMO to conduct an NTB auction, where a total of about 57 billion will be on offer across the standard maturities, 91, 182, and 364 day. We expect the auction to be oversubscribed, closing significantly lower than the previous auction. This is as a result of the demand that has been in the market. We've seen long-dated bills trading to as low as 5% levels from last week. Yes.
I can't hear.
So on the bond space, we expect demand to persist. However, this week we anticipate that the DMO would be releasing the auction calendar that would, clarify and state the bonds that will be on offer for the January 2023 bond auction. In anticipation of that auction, we expect a lot of speculative trading, and that will lead to higher activity in the market.
Now, last week we had the FGM bond auction, the first savings bond auction for this year. And then, of course, we have expectation that the inflation, Nigeria's inflation environment will remain immoderate in the coming months due to consumer price resistance, strengthening of the naira, as well as a softening of global commodity prices due to, the geopolitical tension in Ukraine. So now, what's your view of this when you want to take that into cognizance?
Taking all of that into consideration as far as yields movement, we would expect an increase in yields going into the rest of the year. We expect this year to be a turbulent one. There's a lot of uncertainties, as you've noted. We still have some of the tensions in Ukraine that's causing some supply issues across the world, which may lead to an increase in inflation as a result of the increase in pricing and so on. So when you then bring that into the context of Nigeria, we then would have higher inflation here because most of our, the essential items that we consume are imported. So we would see that inflation coming. As a result of that, we may have a recession. To compensate investors for the increased, inflation that we expect, we would then need to have higher yields. So we foresee higher yields in the market. But again, we've had situations in the past where even though inflation has increased, yields were slow to catch up to that. So, a lot of uncertainties in the market, but the general consensus is for an increase in yields going into the year.
Okay, thank you for that analysis, Dimeji Obasa. So that was Dimeji Obasa, fixed income analyst at Access Bank. Now let's move over to the Nigerian stock market. Well, this is just going to be in a brief. The market ended the first trading week down in the red, 0.06%. Year to date, that's the year to date, and at the same time in Naira value, it lost about 15.64 billion Naira, which is at 27.899 trillion. For the sectoral performance, the greens have it just one red, which was on the industrial counter, while for the top trades, for the trades, we had Ebian Holdings, Boa Cement, and GTCO being the major contributors to a total of more than what you have there on the board for last week. So, Ladi, that's it for the market. It's mostly in the greens, but for this Nigerian stock market, it's just a blip in the red. What we're expecting is that there will be a bullish run this week.
Yeah, and I'm sure you expect your crystal ball will be quite accurate for 2023.
Well, my crystal ball, I'm sure I've dusted it properly.
Right.
I'm sure I'm going to get it. It's going to get better this
All right, we're watching out for that. Thank you so much, Anita. That was Anita there giving us the details there for the market, talking about the NGX and the fixed income market. Now, let's take a look at what's happening in the UK. Now, let's head on to our UK studios. There we have Juliana standing by. Good morning, Juliana. Happy New Week. So I see Resolution Foundation says UK households' income is likely to fall at £2,000 this year. That's a big one. All right, Juliana, it looks like we can't hear you. Yeah, it looks like we can't hear you. Maybe we'll try that again. No, I can't hear you right now. Okay, we'll try again. We'll try and get you back. We'll try and get Juliana back. Can't seem to hear. They're having some little technical issues. But let's see what's happening now with other markets. We see as the new week begins, Bitcoin and crypto market has seen a bounce that could provide new momentum. Bitcoin price has managed to break above the resistance area of around $17,000 for the first time in 3 weeks, and was trading at $17,226 as of early trade this morning. Ethereum is up about 3.6% over the last 24 hours, and it's trading at $1,309. So we see those markets looking quite good. Some euphoria, coming with Bitcoin and crypto market hanging by a thread, this week, as two events in particular, could determine how prices develop this week. Talking about the issue, the Cameron Winklevoss deadline for digital currency group. That's, going to bring some volatility for the markets. And we also have, inflation data coming out in the U.S. So let's look at the sentiment this morning. There is 25 points. We're seeing fear, extreme fear actually in this market, 25 over 100. So we're seeing traders getting more afraid in the crypto market. Let's look at the market cap this morning. There we see it's going deeper into the $800 billion level, up 2.97% this morning. Volume traded up a big 94.11%, almost 100% volume was seen this morning. Bitcoin dominance, 39.06%. Let's look at the price of Bitcoin this morning. Now we see Bitcoin trading there above $17,000 this morning. Quite a big move there, $17,195. They get to $17,200, above that, up 1.47%. Let's bring in my guest now, Mary Jane, who may now DeFi analyst there to join us via Zoom. Great to have you on the show. Hello, Mary Jane.
Hello.
Yeah, Mary Jane, great to have you. And, obviously in 2022, was all about decentralized finance, DeFi, and obviously we know proponents are still talking about DeFi taking over, the crypto space. What would you say are the risks to DeFi in 2023?
Okay. I think based on the speculations, based on the news that happened on 2022, the back-to-back lashes of a lot of loopholes, a lot of acts, over 3 billion has been lost due to the risk, right? The DeFi acts that have happened on DeFi. Now, it obviously goes down to actually tell us, will DeFi still be trusted? Because we are alleging it as an evolution of financial markets, an evolution for a store of value, all right? DeFi is giving us and providing us an improved financial activity where you can lend, where you can borrow, where you can do every single financial activity that we all know, the traditional finance and even more. But the fear, all right, the vulnerability actually undermines the financial freedom it brings, which is obviously the acts and the vulnerabilities, the security breach. Now, one thing we need to understand is DeFi is not actually run by a trusted third party. It is run by a smart contract. And in as much we call it smart contract is as smart as the developer that deployed it. So let's say there's a smart contract being run on a particular protocol or a particular product. It is as smart as the developer who deployed it. So it doesn't mean there won't be loopholes. It doesn't mean there won't be vulnerabilities. It depends on the ability of that particular deployer that deployed the smart contract to see the loopholes. And that's why hackers comes in, because there would always be vulnerabilities on smart contracts. And that's why we keep on talking about smart contract auditing, because there's a lot. Cryptocurrency provides us future to financial system. It provides us future to financial freedom, and we shouldn't be at the verge of security. All right, because now the reason why we still have fear in the crypto market currently now is because of the back-to-back activities in 2022, the loss of money. So if you say I should leave the financial market, the traditional financial market, where I trust that the government provides security in our fiat, so I save it in the bank, I should be able to save my DeFi product, my DeFi coins, my DeFi project for 2 to 3, 4, 5 years. But we have seen with time, DeFi is actually new, all right, it's still in an emerging state. So I believe that every single thing that we are seeing, every single resistance we are seeing, it will influence, all right, it's call it a strategic move to influence what the future of DeFi will be. So all these resistance, all these problems, all these cons that we are seeing is a way to tell DeFi builders to actually build more solutions to actually devoid those problems that we are seeing. So now the fear in the crypto market is, can I hold a DeFi project for 3 years? The same way we can hold our financial fiat for 3 years, save it in. All right, those are the fear. Because now we have seen back-to-back loss of money from the DeFi space, from the crypto space, and all of them are due to security vulnerabilities.
Right.
So if I am
all right, Mary Jane.
you are meant to see.
Okay, Mary Jane, well, so a lot to look out for, obviously, in 2023 for DeFi, but we'll continue the conversation another time. We've run out of time, right now. Thank you so much, Mary Jane.
Sure.
Thank you.
Thank you so much.
All right, now let's head back to London now. We have Juliana again. So, Juliana, I couldn't hear you before, but I'm sure I can hear you now. So we're talking about the forecast there for household incomes from that think tank. How's that looking?
Absolutely. Hopefully you can hear me now, Laddie.
Fantastic.
Good morning. Happy New Week to you. First full week back at work for commuters, and yet again we've got another bleak assessment of the outlook for British households this year. This research has been compiled by Resolution Foundation think tank, and it shows that over the next 2 years, British households, the average households, will lose about £2,000, and this is all about the cost of living crisis, which again we've discussed extensively. I'm sure everybody is familiar with it, but I think what we take from what the Resolution Foundation have released this morning is that we're only halfway through the worst of the crisis. Expect more headwinds this year, which is pretty unfortunate, but I think Brits are pretty much used to these bleak assessments by now.
And Juliana, it's a new week, obviously. What market moving data are we expecting?
It's a new week. Biggest one comes Friday, Laddie. That's GDP. GDP for the month of November. You'll remember between September and October, the UK economy grew 0.5%. Economists say that was really because we had an extra bank holiday for the Queen's death. So we shouldn't really look too much into that growth. I think economists expect it to dip 0.3%. And aside from that, today, the House of Commons finally sit after what seems to have been a very, very long Christmas recess. Prime Minister Rishi Sunak's in-tray is going to be very large, and I'm sure we'll be unboxing some of that when we speak at 1:30 on BizInc.
Fantastic. All right, see you at 1:30, Juliana. Thank you so much.
See you then. Thank you.
All right, that's Juliana giving us the details from the UK, and that's a wrap on the program. Don't forget to join us 1:30. Business Incorporated will have John McQuad there giving us the details in the world of business. And don't forget, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Don't forget, we just hit about 1 billion views on YouTube. Quite a big feat for us there. Thank you so much for watching today. I'm Laddie Williams. Bye for now.